Welcome to Loup TV. I'm Gene along with Doug. This is Sunday, January 30th. We're going to do a quick recap of last week. Second is talk about upcoming earnings this week, and then finish in the toy department. Teaser, it is related to Tesla. Let's jump back to the top. Last week, Doug, we had Microsoft, Apple, and Tesla all reporting great results. Initially, Microsoft shares were down. They rebounded and kind of probably gained a few percent. Apple was up, call it 5+%. And we had Tesla being down a lot. We're not going to get into the valuation dynamics around any of these companies, but wanted to get your take on what is the read-through. Do we learn anything about the state of investing in tech, where that pendulum is at based on some of the reaction from these three big tech giants?
I think the only thing we learned was that investors are valuing companies that have current strong free cash flow dynamics. And this is not me picking on Tesla. I know I upset a lot of people with my views on Tesla being overpriced last couple of days. But I think you look at Apple, you look at Microsoft, free cash flow yields for both of those companies are in the low to mid single digits. And I think when you have a rising rate environment, people want to see yield because it's viewed as being sort of safe. Real yield that's sort of reliable. Obviously, Apple and Microsoft are well-tenured companies that you don't have to worry about them generating free cash next year. So I think that's really the only thing we learned is the flight to quality that people have been talking about is still real.
Mm-hmm. My sense is that there's still a fear of getting run over. I think that's still predominantly in control of at least the tech markets. And I would put it this way, is that Apple's quarter, I've seen a lot of Apple quarters. You have to always make adjustments in terms of kind of peeling back the layers. I think this one was about as good as it got when you factor in the headwinds, and yet the stock was up, call it 5%. I'm happy that it was up, but I think that in a normal environment, the stock would have been up 10%, and I think that kind of speaks to where investors' minds are at. And these don't rebound. These changes, the pendulum doesn't swing back on a week of earnings or the next week. I think we should just kind of hunker down here and just prepare that it may take 3 or 6 months kind of for this pendulum to start to swing back where these companies are getting fair credit. Let's move forward. We got three big ones reporting next week. We'll kick it off with Facebook, and we just want to highlight what we think some of the pressure points are. What are you looking for in the Facebook earnings?
I think there's probably two things that investors will pay attention to. One is just any commentary around the impact, like we had heard from some of the ad-based companies last quarter, in terms of people having, or their customers in particular, having trouble getting supply. And so when, the people who are advertising are supply constrained, they can't meet orders. If they were to go out and drive clicks to their website, they pull back in spending. And so to get a sense for, what Facebook is seeing in particular, I think on that dynamic will be very important. It will be important for Google as well. And I think the other thing for Facebook is the Facebook Reality Labs, the investment, $10 billion they've talked about spending to invest in the metaverse. If there's any updates there, I doubt that we'll get much incremental color. I don't think that number has gone up significantly since they last talked about it, but anything they can share in terms of how they see the metaverse playing out, I think will be interesting to listen to, but probably won't impact how the stock reacts in the short term.
Yeah, let me take it in reverse order here on the Reality Labs piece. As we just talking about, I think the tech market is a little bit of in a show me state. And so I suspect that they won't get credit for however many times they're going to use the Metaverse or Facebook Reality Labs. If you're curious, last quarter, they used those two terms more times, 19 times, than they used the word advertising, and also it came up in the Q&A, that was 16 times. Kind of a fun reality, I guess, of where Facebook investor mindset was last quarter. That could change this quarter. But as you said, this impact about the supply chain impacting advertising spending, there's obviously another dynamic too there, which is IDFA. And on last quarter's call, when asked how much of their punky guidance was related to IDFA versus the overall versus the overall macro supply chain issues, they said they can't parse it out. So question for you, Doug, if you think they're going to talk about IDFA on the call, they're going to talk about the supply chain impacts on advertising spending. They may not break it out, but which one do you think is going to have a greater impact on their business?
Hard to say. I mean, who knows? I would actually answer the question or think about the question in a different way, which is both of these problems are transitory problems, our favorite word that the Fed used to use about inflation. But the reality is these supply chain issues, eventually they'll work themselves out. I don't know if that's going to be in a quarter or a year or whatever, but they're not something that are going to be a forever thing when you think about Facebook's long-term business. And IDFA is the same truth. They are building tools to essentially deliver, I think, on some of the most important parts in terms of tracking and delivering good reporting and the ability to kind of target ads well for customers. And eventually they'll figure out that too at a level that is, I think, acceptable as a replacement to IDFA. So for me, both of these problems are transitory. It doesn't mean that there couldn't be some headwinds in any given quarter. But I think none of them or neither of them are sustained problems that I think impair the business over the long term.
Makes sense. One thing that could impair the business over the long term is if DAUs started to dip. It's been a steady straight line. It's between 6 and 10%. It just quarter on quarter, it grows year over year. They just keep doing it. And I would just mention that as kind of another important bogey, that 6% DAU growth. It's more or less similar to what it was last quarter. I think it was 6%. And so that if that dipped, obviously that would be a problem if they grew at 1% or if it forbidden declined. The one other piece we do, Loup does own Facebook, and we just are believers that ad business is pretty powerful here, and they've got some optionality around the metaverse. Let's move on to Google. You talked about it a little bit there, Doug, and is there anything more to add beyond probably the biggest X factor is around that supply chain? They don't have IDFA issues, or how big is their IDFA issues?
Pretty minimal. I mean, on the core search business, it's not really something that affects them at all. Obviously, with their ad network business, there's some exposure there in terms of making sure they get things tracked correctly. But obviously, they have a lot more exposure to Android than probably most third-party ad vendors. So I don't think it's a big issue for them. I know they did mention it briefly last quarter. I don't think it's an issue for Google. I mean, I think the supply thing is something that is worth paying attention to. Same thing for them. Any issues there are transitory. I think the other question, for them is probably twofold for me. One is a lot of people like to pay attention to cloud. Microsoft had a very strong cloud quarter. I think that's really what made the stock kind of reverse from being down in the aftermarkets to up the next day. So I think we want to hear about Google's cloud business. They're kind of third place there behind AWS and Microsoft. And then the thing that I'm curious about is just how they're thinking about some of these other bets. I mean, we're in an environment right now where other bets are not really being rewarded. And Google's always been great about funding innovation. I doubt that they're going to change their mentality around that as we go into this environment of uncertainty. But if they did say that, I would actually be disappointed. I don't want to hear them backing off. To me, that'd be a negative if we heard any commentary about them, being more cautious or something like that into, rising rates.
Yeah, I think probably the money line would say that they're going to continue to invest in those other bets and probably not give us a ton beyond some sort of self-driving Waymo update, how many miles that it's driven perhaps. And then last, of course, Amazon. Any thoughts?
For them, no major thoughts there either. I mean, I think it's kind of the same thing. There's supply dynamics there that we have to consider. They've had a tougher time, I think, relative to some of the other big FANG names plus Microsoft.
In terms of the stock?
So, yeah, the stock has had a rougher run, in my opinion. And part of that is they had some very disappointing guidance, I think, last quarter. So, now you've got kind of another quarter with Andy Jassy at the helm. He gets to, get his feet under him a little bit more. I think for me, if you're thinking about this as a long-term investment, which is what we always do, I'd like to learn more about how he is kind of seeing the world and thinking about the world, make sure he has kind of the same, maybe a Tim Cook level, replacement, just like he replaced Steve and Andy's replacing Jeff Bezos. So I want to make sure that, as an investor, you feel comfortable with him kind of being the right guy to steward the company in the right way.
I think he's going to show well on that front. From my perspective, you've had the benefit of what's happened in the last 2 years. That has been a particular tailwind for Amazon. That tailwind probably starts to moderate. And then on top of that, you have their logistics company, and you have some spiking costs. I forget the exact language that Tim Cook used, but something to the effect of these spiking expenses related to logistics. I mean, that's a big part of what Amazon is doing. I feel like and then on top of that, while they do have good free cash flow, they don't have the same earnings power that some of these other large tech companies do. And so I think there's still just some right sizing of expectations that needs to happen around Amazon and those pressure points. That would be the wrap for our earnings preview. And I promised we'd go to the toy department. And Doug, I know you're just really excited about this product, so I'll give you the honors of announcing the topic.
Yeah, Tesla added a karaoke feature to its car, and I'm well aware that I have probably zero credibility on Tesla right now in the eyes of most people, and I accept that. I mean, maybe I need to go adjust my model for karaoke now, and it'll change my mind about Tesla being overvalued. I doubt it.
Let's talk about how it works. It's like a couple. I mean, yeah, they announced it in China. I think it's been around, but they sold out in a couple hours in China. 188 USD, I believe. They are wireless. You have to be parked to do the karaoke, and I mean, besides the comical headline of it, at least they're doing stuff that's fun. I mean, we got to give them some credit for that.
Yeah. Tesla is an extremely fun company. I think Elon is a very fun CEO. I think Tesla's a great company. I mean, this is what I said before. I think sometimes just because you think something is a great company doesn't automatically mean it's a great value. And just because you think something's overvalued doesn't mean you think it's a terrible company.
We got to stay in the toy department. We got to.
Yeah. Well, I think I have to justify. I mean, I think that Tesla is very much a great company. I think that being playful, being experimental like this is part of that. I think knowing your customer base and kind of knowing that something like this is going to get attention, gets you a lot of free media, I think is kind of part and parcel and demonstrates their creativity, and probably Elon's creativity in particular around advertising and promoting the product.
It is really surprising that the amount that they spend on advertising is extremely low. I know, Doug, before we started working together, you worked with a mobile ad tech company, and you always preach that the biggest ad buckets out there are related to automotive. Tesla doesn't venture, and they do these other kind of creative things. And I think it's I give them a nod for catching our attention with some fun products. Love the stock. Have some questions about it. Either way, please, Elon, keep up those fun things. And can you imagine Ford doing this, having karaoke mics in their car?
It wouldn't be authentic. I mean, that's the thing. Right. That's
you can't do it.
And I don't think that means Ford's a bad company either. But I mean, I think there's
what would be the authentic? What would be something authentic that Ford could do in the cab experience?
In the cab experience,
you think about like what Tesla's done with. Don't they have like some noises, kind of some like junior high school noises? And
I thought I thought you meant volume to 11, the Spinal Tap
volume to 11.
Yeah, that's a good. I mean, same thing. They're just very playful. I think they.
But they do a lot of those.
But brand.
What other car company has done any of them?
I can't think of any. But I mean, again, let's think about some of the brands though, right? Like that wouldn't fit in a Mercedes. If you're a Mercedes customer, that's not what you want. That's not what you expect. You expect pure luxury, right? If you are a BMW customer, you kind of expect pure sportiness. And so those ideas wouldn't fit there. And I think Tesla, more than any other car company, certainly has its own dynamic character. But, I think that there are, and this goes back to some of the broader thesis we've talked about before. I think different people kind of want different things from their car. I don't know that the playful brand will always resonate with everybody. Some people do want that pure luxury experience. Right. Some people do want that pure sporting experience.
But yeah, I would say that Tesla ran to that kind of the playful side. Even if you think about the design of Cybertruck, they've embraced that, and they've kind of, I think they've claimed the top of the mountain there. And if any other car company, like if Rivian tried to do something like that, people would roll their eyes. You're trying to copy. And I agree with you that it's not for everybody. That's for sure. But as far as another car, I can't think of another car company that's, I mean, imagine like, I don't even want to say the car brands because it's going to come across as negative, but you can just go through them in your head. Imagine they do any of these things. You would just think that they've totally lost their minds.
When you think about sort of modern company building, I mean, Tesla obviously versus all the other auto brands is the youngest of the brands. Most of these car companies are 100 years old. And I think what's different now versus then is we have this dynamic of sort of the individual versus the corporation that has played out over the last decade. A lot of it social media, I think, has driven, because in social media, people gravitate toward following people. They want personalities. You don't want to follow a company. People follow Elon, right? And they want to know what Elon is doing. They don't as much follow Tesla, the brand, right? And so I think there's something really important there if you think about designing new companies. And I think it is a disadvantage probably for a Ford or a GM, where they're never going to have an Elon Musk ever, period. I don't think anybody thinks they will. But new brands, as they come up, I think having a strong personality at the helm of the company, giving the company a little bit of character, I think does create some sort of an edge in this age of attention where there's so much stuff going on. There's so much noise. When you can cut through uniquely like that, it is an advantage.
I would say from an EV perspective, that is a tall order to think that personality is going to come along with some startup that is going to really go and shake things up. But your point, well taken, is that just in general, companies are going to come up and be driven by personalities, and it's just a good reminder to be memorable. I don't know if this episode is particularly memorable, but we had fun. On behalf of Doug, Gene, and Loup TV, bye for now.